In this video, I'm going to go over the uranium thesis updated for 2024, as well as the uranium stocks, about 40 of the top uranium stocks, pretty much the stocks I've been tracking for the last almost 5 years. And we're going to go over those and rank those. And I'm actually also going to go over the big uranium thesis and nuclear energy thesis in this video. A lot of stuff has changed, and there's some really big uranium news actually today. We're about to open up in the market. We've seen a big run in uranium, and with my thesis, as always, this is not saying that anyone should buy or sell uranium stocks. And this is not investment advice. This is just my research over the years. I've done this for multiple years. And one of the really cool things, guys, is that a lot of huge things in uranium are happening all at once. And there's pretty much unlimited amount of funds that could be coming into this compared to the size of the uranium market. We're talking $1 trillion companies, multi-trillion-dollar companies going to be investing in uranium. And let me make sure we're live real quick. Type 1 in the chat if we're actually live still. It says we're live. I want to make sure before we get into all this. Let's see. Looks like we're live. Yeah, we're live. All right. Yeah, we had to postpone it for a second. So yeah, if you guys are just joining in, let's get this pretty interactive as well, because a lot of this stuff is, I give it a score like a 1 through 6 when we rank these. And we're going to be going over this. But one of the big things is we got to look at some of the huge things today in uranium, and a lot of stuff that I think is going to happen over the next 6 months to potentially like 18 months. And all right, so yeah, you guys can hear me. Okay, cool. Just want to make sure, because this is going to be kind of in depth right here. But right now we've got some big news coming in. And one of the big things that I was telling you guys for the past 3 or 4 days, right? NextGen Arrow deposit. It's one of the biggest ones in the world, right? Really high grade, and it's up there in Canada. And what do you know? What did I say was going to happen? Potentially, I said litigation risk. The tribes are probably going to back this. I don't know if that is a Native American in me, thinking this might happen. But I've been saying this for years. Kevin Bambro was also one saying this. So the completion, John Quakes tweeted this out, the completion of Canada's technical review of NextGen's proposed Arrow mine, aka the mine that's probably going to slow down or potentially end the longer term uranium bull market if it got into production, because overproduction probably would eventually happen. But there's so much demand that it's not necessarily going to end it, but it could slow it down. So we'll call it the FERT, the Indigenous community there, has been delayed another month until at least November 19th or longer. And Quakes thinks it's highly likely FERT is waiting for the results of the National Security Review of the Paladin fission merger before issuing their report and recommendations to the CNSC. The two mine projects, Arrow and Triple R, are literally side by side. I anticipate pressure by both FERT and CNSC to bring the two mine productions into a combined review to evaluate the full impact in all aspects of the two projects as standalone, and thus sharing of common infrastructure, so as to full understand and quantify the overall environment and economic impacts of the First Nations. So Quakes has been saying, I think, and I searched it up in the Discord because it's hard to find on Twitter, but Quakes is basically thinking that this is a bullish thing as well as me. I think this is bullish because this mine eventually will lead to overproduction. It will lead to lower prices, potentially in uranium. And, you kind of want, if you're hoping for a long-term uranium bull market, you don't want a spike and then a drop, but this is just one of the things that we're going to go over, because I think the demand is going to be too high, even if, this massive Arrow deposit. So this is UEX. They're not even a company anymore. UEC got this project. So Arrow, you can see how large it is. These 350 million pounds in this area right here. And this is going to be the higher grade. So this Phoenix project, UEC got high grade, but a lot of these projects with uranium, they're not even going to come online. A lot of these projects, I don't think Arrow is going to get in time for this earlier part of the uranium bull market, potentially, because I think this could last into 2030, potentially longer. And we're going to go over why, because there's some crazy news. And I've really studied the past with uranium nuclear energy. And I'll show you charts, that probably 15 to 20 different charts and pictures and things that you pretty much can't find anymore that have been, some of the stuff was out there, in the 70s. So you guys are really going to want to pay attention to this. And if you want to stop the video or put it in, slow it down or stop it, this will be saved for you guys on here. Now, this, like I said, this is the size of Arrow. So these are the biggest right here: Cigar Lake, MacArthur River, up there in Canada. And these really were one of the big reasons when there was a mine flooding, and they had some issues during the last uranium bull market. Obviously, when the biggest mines, there's issues, and the potential biggest mines, a lot of people thought that this was going to be, coming online. And it doesn't mean that NextGen isn't going to be a potential, runner, good company from here, but it is showing that there's going to be, and if uranium goes to 200 and stays there, I mean, this could really lead to, I think, the tribes also, because it is a money thing too. It's not just an environmental thing. There is money involved. There always is with tribes, casinos, there's these type of things. It is a big, portion of why they're going into this and the voting and trying to figure things out. But this is a big thing. And I've been saying this. Now, another thing is the world's largest uranium producer next to Cameco, that we were just talking about with those two mines, Kazatomprom, they're seeking shareholder approval to enter into new supply contracts with China. This is going to be valued over $2 billion. Now, Kazakhstan's shift, I've been saying this for a few years, that a lot of this cheap supply is going to be going to China, and already has, like half of it already. And the West, these utilities have already really wanted to start to utilize, this in the future. They thought they could, these utilities. They thought they could go into the spot market and buy this up, but you're starting to see this, go away. So supply and demand. Now, I just tweeted this out, and I want you guys to see this. This is just phenomenal. So when I'm talking about a new, especially American, nuclear energy renaissance, something we haven't seen since the 70s. So in the 1970s, the world added 150 nuclear power plants, and this was in less than a 10-year span. And uranium prices, adjusted for inflation, actually ran up 700% during this time, and it was around $218. It was over 200, right? And this is happening again. We got 150 new reactors coming from China alone in the future, and hundreds of SMRs that nobody, saw coming. Like, nobody really saw this AI, crypto, type thing coming, when, especially I'd say like 5-6 years ago, not a lot of people saw that coming, right? And you can see down here, the reactors, the capacity exploded. So this is 1969. You got 70. And then by 1979, you got 223. A lot of these reactors, some of them, like I said, have been being extended. A lot of these sites too. The next big thing we're going to talk about, these sites, this is something I was reading in a bunch of documents, that the DOE has revealed recently that 269 gigawatts of new nuclear capacity could actually be added to these existing coal plants. A lot of these coal plants that are already retired and being retired are big places for not just these new sites, these new nuclear sites across 36 states, but there's literally 145 coal sites that can host up to 174 gigawatts. And this is literally what was just posted in the past like 5 weeks, while 41 nuclear sites can support up to 95 gigawatts. So includes advanced reactors, and most of these sites are untapped. And this nuclear run, I really think is really going to, ramp up to the next phase. And I'm going to show you in a bunch of charts up here. You can see across the top here, there's a lot of stuff we're going to cover in this, but these things are, not a lot of people are really talking about this, like converting these coal plants can be done. And this is what, especially uranium investors, need to be paying attention to. Now, it doesn't mean, I think a lot of the uranium stocks are going to drop 50% potentially, as they do a lot over the, during this next run. There's going to be a lot of people taking profit. And same thing with nuclear energy stocks. We've been seeing, market opens in 3 minutes. The market's a little red, pre-market for a lot of stocks. Centrus Energy is already down like 3.6%. But one of the things, we'll kind of get into it once the market opens, but the market's still a little worried right now about, we got an election coming up. There's stuff in the Middle East. But these things are, specifically this, it could create 30 to 100 jobs And we're talking small modular reactors. Some of these can be built a lot faster. The footprint is a lot smaller. And really, this is the biggest shift in U.S. energy that we've seen since this time. Now, just giving you an idea, a ton of coal kind of visualized is literally the equivalent power of 1-inch uranium pellet, right? And I made this a while back, but it's like using, in 2021, this was a 2 terabyte. They've got even bigger now. And this was a 2 megabyte. That was the size, like that's like the size of larger than a refrigerator. So I really think that they're going to start pushing away from coal. A lot of these coal plants, there's no reason to be using it. So that's a good visual. Here's another good visual that I've had. These 6 barrels of uranium literally equal 220,000 barrels of oil equivalent. So what are we doing? And a lot of the new reactors, a lot of this stuff can be recycled a lot easier. And here's another visual for anyone looking to get into this. This is the amount of kilometers that these onshore wind farms will take up, over 1,000. This is solar farms, and this is 525 kilometers squared. And this is the footprint, and this is the Hinkley Point C. This is there in England. This is the size of this is less than 2 kilometers. Now, these small modular reactors, they're not going to be as big, but the fact that these take up so much less room, these small modular reactors, this is the future. This is where this is going to be going. This is why I've been, really bullish on this sector. And I think there's things to talk about. I've made 150 videos on uranium, 160 maybe over the past, 40 plus years. I've been, kind of silent, not going to talk about things when I don't think things, when I think there's going to be a pullback potentially, and I'm not saying to buy anything or sell anything. There is a lot of countries, not just America, not just China that we were just talking about, but a lot of countries that are looking at this. And this was a really interesting chart. This is from 1967 to 2021. There's a big amount of construction going on in a lot of countries, especially in the East. And some of these countries, small modular reactors, they can actually, Japan is one of the best at getting these reactors up and restarting them very, very fast, right? China, they're not too far ahead. But with America, we're literally one of the best as well at getting these new nuclear power plants going, the construction times, but these small modular reactors, they can be a lot faster. So this was an older chart, and you can just see all of the countries, how long it takes. Usually in the Middle East, third world countries, it's going to take longer. But, these countries, especially the first world countries, they're going to be putting a lot of money, and I'll show you how much. Now, this is one of my favorite charts. This is what, I think I have a little updated one, but this was the last uranium bull market. This was how many pounds of U3O8 was being bought up at the time. And we're getting back to this. So we're like over here, right? And they're starting to buy up hundreds of millions of pounds, right? Over the next few years. And you can see what it does to the price of uranium. And when the price of uranium runs, uranium stocks go up. And that means because their leverage plays on the price of uranium, some of the uranium stocks run up a bunch. Now, we've already seen uranium stocks run up a bunch. There's big room, especially for some stocks that, get in production and have uranium. It's going to be a big deal if a lot of people want to get into it. Now, this is another cool chart, global average annual nuclear power investment by country and region. So a lot of this stuff you see in like, say, 2031, 2035, a lot of this stuff is moving closer. So these times it's being stacked up over here. And this is the amount of money that's being estimated to go to zero carbon, especially by 2050. So China is literally investing, tens of billions of dollars in nuclear power, restarts, and literally creating brand new ones, small modular reactors. And because there's some big news coming up about nuclear energy in China and AI and all these things, Taiwan's semiconductor, these companies are literally using majority of the country's power. And they're literally scrambling because they see this as a way there's been economic stimulus in China. They can't fall behind. And there's going to be, especially if things change in Washington, there's going to be this kind of, I consider a nuclear energy war type thing where they're trying to see who can, make the most reactors, who's going to be carbon neutral potentially by 2050 and really be the AI leaders, because that's going to boost the most GDP. What did NVIDIA's already added $3 trillion to their market cap? Going to be $4 trillion. Some people are saying it could be $10 trillion. This industry, so they use tons of electricity. These supercomputers, each unit, the the amount of electricity they need, not even talking about Bitcoin mining and things like that. They're energy users, right? And we already have issues in a lot of first world countries with energy. Germany, America. So the amount of money coming into this is thousands of times bigger, and even bigger than that than the uranium sector all combined. So here's a cool, better chart. 1.3 billion pounds of contracting is needed by 2035. Now we have filled some of these contracting since 2022, but we're seeing this line here. We're not going to be able to meet the demand that's coming at all, especially because in the US, we don't even really produce any uranium. We haven't for decades. But the long-term contracting, remember this? You see these? That's what's coming. And that's what runs up the price of uranium. So these utilities, a lot of utilities have been waiting around thinking that cheap Kazatomprom uranium is going to be there. This is an old chart. We don't know specifically because this is an opaque market, but this was what the projection was going to be for US and European utilities that we're talking about contracting. And we're in 2024. It's getting down to here, right? Less than 11% of coverage rates for US utilities. And then in England, it's starting to drop down. We were when uranium started to take off in 2020, look at the rates. They were fully contracted pretty much. There was no issues. Now we're starting to see scrambling. It is becoming from people that are in the fuel sector. That's why we've seen spot uranium go up to 106, and we're just getting started. Now, what I said with this nuclear energy renaissance, uranium's, I think, going to be probably sustained at 200. Now, here's the thing. $200 uranium is not like $200 oil. It's not going to cause massive inflation. The world's not going to crazy economic issues. It's a very small sector. The price of uranium, if it goes to 200, it's not going to break the bank for these utilities. And the fact that uranium should have never dropped down to where it was below $20. The fact that it did, because it's so hard to mine, there was overproduction. A lot of these things, there wasn't enough government regulation and a lot of world regulation on uranium with the megaton and megawatts, dismantling nuclear weapons, as well as companies like Kazatomprom coming into the market, really having cheap uranium. The governments and people that stockpiled from the 70s and 80s, there was a lot of uranium because a lot of things were negative during that time. They were shutting down nuclear plants. There was 3 Mile Island restarts happening. So, you've got oil companies coming in. So I think uranium will be sustained in the future. I've always said this, $200. That's not even because of inflation, but because the price needs to be there. That's why you have these boom bust cycles. That's why these companies, 400 uranium companies, went out of business the last uranium bull market. They literally delisted a lot of them. A lot of them were gold. A lot of them were, they call them moose pastures. Up in Canada, they weren't really good uranium companies. Now we're going to talk about how much uranium is in America and what this means. I think big oil will come back into uranium. Gulf oil finds uranium. 1969, right? This is the price of uranium you can see compared to gold. It did phenomenal. Way better, right? Way better than crude oil as well, because it was such a small sector as well. So any uranium stock, Denison Mines was running back then. No big oil company was going to buy them up, but didn't happen. Now, this is, a legend of all of the uranium mines in America, right? These are uranium databases. So there's plenty of uranium out there, but it doesn't mean that it's going to be easy to mine. And here's some other mines. You can kind of see visuals, the size of them as well here in America. A lot of uranium was mined in Texas during this time. But as you can see on this chart, this pretty much after into 2020, there was no mining going on in America, no uranium production, right? This is kind of accurate about what the numbers are. Russia, Kazakhstan. And when America, gets into production, we have this new uranium bull market. A lot of the companies, I think it was around 76 million pounds of uranium was mined just out of Texas alone. 76 million pounds. So there's plenty out there, but the sustained price needs to be about $100. Now, this is another nice chart. Today, the U.S. used about 81 million acres to power its economy. Hydropower, visually, you can kind of see wind energy is going to be up here. You can see we're very diverse, but uranium, nuclear power is, 20% of the U.S.'s baseload power, but it's phenomenal energy. That's why these companies like it, because, you're not going to be able to run AI in your database plants, the, crypto mining sector. All that's not going to run on wind. And the fact that nuclear power plants is kind of a visual of what it, the amount of acres it takes. It's nothing, right? 51 million acres for, biofuels, and look at your nuclear power. Look how tiny it is. Now coal, that's the other thing. Coal, it didn't take up much either. But what were we saying about coal? A lot of these retired coal plants are going to be using potentially to turn into nuclear power plants, small modular reactors. That's why the change can happen pretty quick. And as we saw, America and China and Japan, they can build these up pretty quickly, and they're going to be really the runners of this. America's not going to get left behind, right? Fossil fuel power plants is the least amount using fossil fuel. That's why it's been pretty popular. But nuclear energy is going to be the best one, right? Now, what we were talking about earlier, all these uranium stocks, we're going to get to ranking these. But if you see in this is Paladin's. And if you ever want to know anything about a stock, or especially uranium, go pull up old annual reports and read those. I've read hundreds of these, right? I've got a video where I read 10 hours straight of annual reports on this channel, just to prove a point that most hedge fund managers don't know what they're talking about. Like, there was a hedge fund manager recently talking about PayPal and saying that Venmo was their competition. Well, guess what? Venmo owns PayPal. I mean, PayPal owns Venmo. So they're 1-1. And I mean, you could see that if you had read, potentially one of the annual reports. Now, Paladin was the literal explorer that went to producer. And by the peak, they got into production. Now, one of the really interesting things about Paladin was this stock had ran 100,000%. So we're going to go over these uranium stocks in a minute on the chart, the explorers. It's all about management. But one thing that happened with their production is they actually had a loss as they started to get into production. In fact, they had to purchase 250,000 pounds of U3O8 as a strategic holding to assist in meeting some of the early contracted deliveries of their Langer-Heinrich production there. So this is at the peak of the uranium price, in the peak of the uranium bull market. This company had got into production and they were already at a deficit. There was some issues. This company had ran 100,000%, and they were just still having to buy 250,000 pounds of U3O8 in the market, and they barely had produced leading up to that point. So just because a company in uranium doesn't have uranium, or they're not in production, doesn't mean that stock can't run up. But I think with this type of information now being almost instant, I mean, we're talking about it here, and you all are watching from around the world. We're going to get this info because I'm going to put it out there. But so it doesn't mean that maybe some of the producers, if they're not getting into production, maybe the stock won't do as well, this time around. But when they were having these contracts with companies like Constellation Energy, Duke Energy, they like to, these companies, the way they buy their fuel, right? They're a few years out. Well, they like to hedge well in advance to secure supply. This is from Constellation's Energy annual report. Now, they like to hedge the supply and avoid the near-term cost variability, right? Because it's an opaque market. Prices go up and down. We were at 106 recently. And the thing is, they like to hedge, right? Now, U308, that's uranium, is going to be 40%. Conversion, remember I showed you guys on that chart yesterday, it's 10%. Enrichment's about 30%. And the fabrication is about 20%. So what I was saying earlier, this is not going to break them if they have to pay early in advance for $200 uranium, right? Now, this is going to be massive for uranium companies' bottom line. This is why uranium companies go parabolic a lot of times. You can be a company making nothing to, if uranium goes to $200 and you're holding millions and millions of pounds of uranium, the amount of contracting that you could do potentially with that uranium with these companies is phenomenal, right? And the stocks usually run up very fast. And that's why historically you can see, and this is a fun chart to see, Paladin was like 1 cent. And this is actually around 1 to 2 cents back in like 2004. But this had ran up over 100,000%, 102,000%. Denison, which was still a junior mining company, it had gone through its times. In the 70s and 80s, it was actually pretty big. It was going to be bought out. But these boom bust cycles churn these companies usually into shell companies. And they, but with this new uranium bull market and with utilities seeing in the past, I have a feeling that they're going to help uranium companies out a little bit better. The government's going to help them out. You're probably not going to see these companies, the big companies like this, Cameco, they're not going to have as many issues as they did in the past and be pretty much diluted to nothing. But a lot of these things were, like I said, the flood of the biggest mines. And the funny thing is, like, their prices peaking, during June of 2007, yet a lot of these companies had not even got into production. Like I said, Paladin barely getting into production. But when these companies go from explorer to producer, that's when you see massive, massive runs in these stocks. So people were asking me, they're like, oh, you're talking about uranium, and like right now the market's been open for 15 minutes. So, Centrus Energy, it's still pulling back a little bit. Like I said, I would not be surprised to see a 50% drop if we have issues in the market back to this support. We've had a lot of gains just in the past like a couple months in a lot of these uranium stocks. I've got a lot more charts to show you guys, but I just wanted to show you that, like, UEC, that's the big one there. A lot of these uranium charts look exactly the same. It's because they're small compared to the overall market, right? If the market's down, a lot of these stocks are going to be down. A lot of explorers, a lot of developers here. You can see some of these developers are down a lot. And we'll talk about that in a little bit. UEC, they're the ones with a lot of projects. They hold a lot of uranium. They're in US. CEO is very vocal. So a lot of these things, apply, and we're going to talk about. But as far as when you get into exploration, that 100,000% gain that you saw, very rare, probably not going to happen. Could happen, but probably not going to happen because you got to have a really good CEO. All these things have to fall into place. But a lot of developers could become producers in this. And this chart, the Brent Cook's exploration insight, this is pretty good that I like to show people when they're new to this, or even if they're not, just remind them. The exploration phase, they find, pre-discovery or the concept, the price is lower, right? And during this time, speculation happens. We've seen this already in uranium, right? There's been high discoveries, fission. These companies have some really high assets. But the stocks, 2021, a lot of them peaked and pulled back, right? Things have sold. There's been M&As, UEX, TUEC, a bunch of companies, right? But then during this, what they call the orphan period, it's kind of like what we've had, right? Feasibility study, the development of these mines. A lot of these producers, even Peninsula Energy, right, is saying they're thinking about being able to get into production, right? So this is when that startup happens. And if the companies have good management, then they're going to, in good relationships with utilities, there's a potential that they're going to be able to start to contract. And that's what, reading the annual reports, that's what, Paladin did, because they had one, John Borshoff, which is a really good CEO and really impressive run, right? 100,000% in 4 years. Now, that's probably not going to happen with explorers now. The markets are a lot different. This long-term effect can happen, I think, with a lot of developers and even producers are in this stage right now. So, this is kind of where we've been. It's kind of the funny thing that I kind of like this orphan period for a lot of these uranium producers and developers as well. They've had to raise and dilute. You've seen on the uranium charts, a lot of these stocks have diluted since. I try to stay away from stocks, dilution. That's another reason why sometimes we've had these 50% pullbacks, right? The price of uranium is dropped back just a little bit. Here's kind of another little area. This is also where when they get into production, that's when you usually see the share price really start to move. You start to see, triple digit gains, right? At this point, when you get into production. But eventually, boom bust cycles, right? These uranium mines, they won't last forever. And there's been just so much news. Like this is some more news. Just in Asia, we're talking about in Japan, they're literally, the economic minister says the country must maximize use of existing reactors. We've been covering this forever. Inagua, number 2, restart is confirmed. That was October 7th. Shimane, number 2, December restart announced. This is Japan, right? They've had major issues in the past and they're still going back. October 18th, NVIDIA-backed AI firm says that they'll relocate to Japan, back to relocate if nuclear is available. So like, yeah, these big AI companies can't do it, right? Philippines, October 7th, this was Korea, will conduct a feasibility study on the possibility of completing the Batten NPP or start new. October 14th, delegate, I think that's probably what it should be, traveled to UAE to foster relationships and possible finance support for the energy expansion. Goal 1.2 gigawatts. And we just keep on going. South Korea, same thing, announced amendments to the energy policy to include 4 SMRs totaling 700 megawatts. Small modular reactors are in addition to the 4 large reactors they're building there. And this just keeps on going, you know, Vietnam, Taiwan. And if we go back to my chart here, like I said earlier in my tweet, that we're starting to see, look at the countries that, you know, back in this time, Japan, look at how many they were doing each year. And this was back when the technology was it wasn't as good, right? Small modular reactors, a lot of those take up so much smaller space. And if they could do it back then, 1969, and ramp it up, I think people have been sitting around not expecting. And when this happens, do you know that these reactors, they front load? What they do is they literally are going to buy up tons and tons of uranium. Not just uranium, where we're talking about SWU and all the other parts of that fuel cycle. Those prices are going to go up. And when they can't find uranium, they're going to pay pretty much whatever they can with any uranium that they can find, right? And you're going to start to see a lot more speculation in this. But there's just been an enormous amount, because these utilities, like I said in this chart, they're starting to really, the future contracted coverage rates are starting to go really low, right? Especially here in America. And we've already started to see lots and lots of uranium bought up. That's why it went to 106. Next, we're with the US market. Remember, uranium sector is very small. It's kind of tied to this. So if we see a massive drop in, you know, the market or AI stocks, a big pullback, uranium is not immune just because the price of uranium's up. A lot of the stocks, there's day traders, swing traders, there's long-term investors. They're going to want to take some stuff back, right? So it's a real big issue if you trade with emotions. If you're in uranium, expect 50% pullbacks, right? Oil as well. Oil's had a little bit of a pullback, right? Today, down like 1%. And a lot of this stuff is because the US inventories, they've increased 1.6 million barrels. So same thing, supply and demand. Like I said, if uranium gets over $200, it's not going to be like it was when oil was back here and there was, you know, issues and inflation. But US elections coming up, we've got a lot of bipartisan support. It doesn't really matter. There's going to still be massive support and a massive money from the private sector too. And the East, you take out America, you still have the East doing their thing. This is going to be one of the probably most volatile but fun bull markets, I think, in any sector, because I think it's going to rival that like it was back in the day. Now, this is another thing I posted. I posted a bunch of this earlier in the Discord, but this was Deep Yellow. I like this because John Borshoff had all these charts made. This was not even including, John Borshoff was including just kind of this Eastern play for this third cycle, the nuclear revival, he called it, China inspired. But now it's not just China, it's AI and crypto inspired, which is literally 10, 20, 30 trillion dollar industries, right? You put all that together, it could be more than that. Someday it could be even more. We're talking robotics, all these other things. It's massive amounts of energy. Nuclear energy is going to be needed. But you can see annual uranium production. This is the one in the back, the line here. This is what was happening, going up and down, up and down. When you have overproduction, the price of uranium is going to start to go down. You have not only that, but you have nuclear issues, right? 3 Mile Island or Fukushima. A lot of these things were big. Chernobyl as well in the 80s. The oil shock, the Cold War, these things really, like I showed that uranium ran up 700%. That was when this nuclear revival happened. And if uranium is kind of where it's at, I think 200 sustained is very easy. But in this market, you never know. This thing could go to 500. I mean, 2020, did you guys ever think we would see negative oil? Negative oil prices, you're paying for that? On 4/20/2020, literally 10-year anniversary of the Deepwater Horizon, when there was a BP oil spill, literally negative oil at that point. And then what about when, you know, the war in 2022, when it started, the pipelines, you had from 2020 to 2022, natural gas has gone up like 5,000, 8,000% at that point. I mean, uranium, and people are like, no, uranium can never go up, you know, 100% from here, 200%. It's like, you kidding me? Do you understand how this works? Do you understand what supply and demand is? That's what's going to happen. And everyone thought I was crazy when I was talking about $200 uranium. They're like, yeah, right. Because everyone's just looking at the past. No one's looking into the future. No one's looking at AI. No one was looking at crypto, the amount of energy it used. No one's looking into the East in China, a lot of people were just like, yeah, America doesn't mine uranium, and there's billions of pounds of a billion pounds of uranium in the US. It's like, yeah, it's not like oil. It's not like oil or even gold. You can't just grab it out of the ground and then put it right in a reactor. It takes multiple years, right? And you need license to do this. And previous time, a lot of the people in the government, they retired. They didn't care. They made their money and they left. So this cycle, I think this needs to be revamped. I would consider this cycle. It's not just an Eastern play anymore. It's AI. When $3-4 trillion companies are buying into this and investing into it across the world, and there's competition. These companies are all trying to be first in AI, right? AI is it's going to be a big part of the future, and there's trillions of dollars going into it. And without energy, they can't run it. So they're going to be investing, and nuclear energy is really the only way, because all the other stuff would take too long, I think, with permits. That's why small modular reactors are a lot more right now. That's what they're looking to do, because the other thing is, we already showed you the permits that they're going to need. They would need to expand the size of a lot of these, other properties, say in the US. Look at how much, a lot of this land's owned by the federal government, but if they were doing biofuels, look at the amount of, and this is not as reliable as nuclear. Nuclear is going to be the most reliable one. That's the big thing. You got to have reliability with AI and crypto, because it uses so much energy, right? And this is really the biggest part of my thesis, and a lot of things have been updated. But as far as uranium stocks, and we'll try to keep this up pretty short. We're not going to go into really far depths, because I feel like when I would do that in the past, I would be like, just because something looks good on paper, you kind of got to give it a big round average, right? Because I like to go with a bunch of different metrics, okay? Just because they hold uranium doesn't mean that they're going to be able to contract it. Just because the stock, they have a lot of investors, say in Australia, doesn't mean that they're going to get those US investors coming in, the big funds, right? So a US listing might, be important for these companies. And the ones that did, usually you see the market caps go up. Now, really quickly, we'll go over. So I have a tier list here of the 40 uranium stocks, their market caps here. So a big thing is management to me. Next is production time. Next is media. So that's going to be, are they going to be promoting? Doesn't necessarily mean promote, but it also means, do they have a presence online? Their stock, is it going to be easy to find? Shareholder presentations, are they good on that aspect? Exploration, give it a rating. Jurisdiction, we've seen. What about Arrow? What happened? Well, it's probably going to be lower than I had it before. Let's see, because we might update these live as well, and some of you guys might give your take as well. But as far as NextGen, NXE, my jurisdiction, I had a 3. This is probably going to be even lower now. And that was actually because of the tribes. But now we actually have real stuff going on with the tribes. That's going to be a big part of it. So costs is another one. And then financing. Value. So like value is going to be like what the price is right now and in the upside. In pounds, the higher the number is going to be obviously the higher. And then the actual pounds. Now some of these are estimated. Now when it comes to this is like not necessarily with Centrus Energy. They're not holding pounds of uranium. They're going to be fuel, and it's going to be what their value versus some of the other miners. Because I put them in there because it was one of the stocks that I think that was very unique, and it's paid off ever since. Now you also got some on this. It's kind of nice to see how far they are away percentage from their 52-week high. Now a lot of these stocks are getting close to that 52-week high, right? Already. Now we've had a little bit of pullback, and then the float, and are they in the ETFs? That's another big thing. If they are in a lot of different ETFs, right, then when big money comes in, a lot of them might just want to buy ETFs, right? We've seen ETFs do pretty well. And if they're in there, then you're going to get that boost from ETFs. So I've seen this, and it's a part of it. It's not going to be the telltale sign. Now, when you go through this, management, I think management was already pretty good with Centrus, but I think with the fact that they've got their new CEO from Orano, and the fact that because they're such big players in the fuel cycle, I think that that's going to be, so I gave it a 5. Now I won't go over every little number. I won't go over if it's a higher number, then obviously I'll probably talk about it. But if it's mid, then that's just kind of what I came up with. Now I can look at you guys too in the chat here. A lot of you guys have been talking about it already. Haven't got to it yet. I'm trying to get this done pretty quick. Today's my wife's birthday, so we're going to be going out. But I wanted to get this out because I've seen so much news and I haven't really updated people on this. And like I said, this is not a recommendation to buy any of these stocks. They could be overvalued. My exposure to these stocks, I'm not saying that I'm buying, right? I'm not saying that I own these. I have owned every single one of these stocks on here at one point, all 40 of these at one point. How the entire sector is going right now with uranium and nuclear energy, a lot of eyes on it. And then the volatility in the market, election coming up. I still think it's going to be a volatile sector. And that's why I've chosen really the past year and a half, and to be more of a trader, swing trader at this, because the amount of money that I've been able to make on pullbacks and then buying in when, we have black swan events and things like that, which we've had every pretty much year since this run started. It's been a wild ride already. So it's definitely helped out. But this is helped by tracking it. We're tracking it. And I could be wrong in this. And if you guys, since we're live in this, you guys might actually be like, oh, they have this, or wait, they changed CEOs. Because when I've followed these companies for years. What's cool is in the Discord, I'll usually be able to look up the ticker or whatever. We have hundreds of thousands of posts on uranium that gets pulled all across the internet. A lot of stuff that you can't find anymore too. Like all those charts I had in the Discord. So I was able to literally bring them out. You guys seen some of the stuff like I said, are in books, you won't be able to find it, that I had been collecting just so I could, for my thesis, the long-term thesis, because things are going to pull back. Now, another thing is that, this company's really, the reason why it's at the very top, it's the value's probably a little bit lower just in the meantime. I'd say it's halfway because it's ran up pretty quickly. Now, I think that because it's like a $1.2 billion market cap, that a 10 bagger from here, even that's not too much to ask for, especially when they could be potentially have contracts in the 3, 4, 5 billion for HALEU, coming in, making billions of dollars, right? Making what their pretty much their market cap is. So I think that it's not too much to ask. But the next one's going to be Cameco. The Camecos, they're obviously going to be the leader and producer. This, obviously, since they're the second largest producer in the market, but the value here, I'd say it's the same. And I actually might give it a 2. I think a double from here, close to 50 billion, that's asking a lot. A lot of this is because a lot of their contracting, if they're contracting now and they're filling things up far out with these utility companies, a lot of them have been scrambling, then they might not be able to catch that $200 peak. So timing is everything, right? If you buy in uranium in March 2020 and you're still holding, then you're up thousands of percent and you don't have to worry. I mean, if the stock goes down 50%, then you're down thousands of percent too, potentially. So the timing really is everything in this. Now, if these companies if they have bad contracting and they're like Paladin was, and they have issues in production, which Cameco has had many times with their mines, the stock price could suffer potentially. So I'd say like right now, the value, and now if the uranium price starts to go up, then I think this might change. Obviously they're going to be, with a billion pounds, they're already over $1 billion. They're going to be fine in this, right? Management, they've got good management as well. The next one is going to be Sprott Physical Uranium Trust. This is going to be more for the big funds coming in. They're going to probably buy it, right? We've already seen this go up. The problem though we've had is like, this will spike, when we hit uranium is 106 and it drops down, and then, they have a discount. So it takes a while, but what we've seen recently is a lot of people have been selling uranium stocks, specifically taking some profits in uranium, and they've actually been buying up, Sprott. So look, it's actually pretty even today. But you've seen a lot of uranium stocks are down, and this is probably for news, right? GoVX is down literally 18% today. Deep Yellow is down, was down 3%. Those are delayed. Let's see, DYLLF. UEC's down 1%. So even Kazatomprom down 2.6%. Cameco down 1%. So, I mean, from where they're at, like all these charts, that's the thing with like technicals, pretty much everything looks the same. They're all going to look very similar when, especially the producers, right? UEC, that was UEC and that was Cameco. You know, the charts are they're all tied to uranium. Uranium's pulled back, I think, slightly, but because it's opaque and all these contracts that Cameco's making, you're not going to see this, right? You know, you're not going to see if these utilities are panicking, but you know, it's kind of like looking at the stars far off. The things you're seeing right now and the light was, you know, long time ago, because it takes a long time to get here. So the same thing with the price of uranium. That's why a lot of times the uranium prices or the stock prices can run before uranium price starts to run. You know, you got this front loading, utilities might be coming in, buying Sprott physical uranium trust as well, buying, you know, pounds, these companies, I mean, hedge funds. And so, yeah, you get a little pullback and then they get a discount. So, but I still think that it's going to be probably one of the ones that, because big money is going to probably buy into it. And when the amount of uranium that they hold on average, it's going to be worth a lot. Uranium breaks 200 plus, right? The other thing here is Energy Fuels. Now, this is going to be adjusted because I since changed my mind about Energy Fuels. UEC, I think deserve a higher spot here, and we'll kind of change this up. I think the Energy Fuels, I'd say the jurisdiction is probably one of the best. The 5 here I'm giving these, the U.S. producers, U.S. developers are going to get a higher jurisdiction for me now in my thesis, because there's a nuclear energy renaissance in the U.S. and there's not a lot of companies that are going to be able to get in production. And UEC holds physical uranium. Now, Energy Fuels, you have an RE side, rare earths, right? I think that's taken away from a lot of its run in the past. They don't hold as many pounds, and the properties UEC got from UEX has been phenomenal, right? That Phoenix property we saw earlier was one of the highest grades, right? One of the highest grades, was it 19%? So it's going to be one of the ones, I think, that because it's also on the US stock exchange, that's another reason. I give management, I'd actually probably raise that up. So that's probably going to actually move it up a little bit, right? This is going to move it here. Energy Fuels, like I said, I think a lot of you guys, and I'm sorry, there's a lot of comments in here I haven't even looked up to because I've kind of been on this roll. But yeah, UEC is probably one of the best bets, I think, right now. The market cap, it's like I said, it's still, you know, if this company could become a mini Cameco in the future, and there's plenty of uranium, especially there in Texas. You know, like I said, there's $1 billion+ pounds in the US, over $100. It's feasible to get into production. And a lot of their mines, you know, it will take time to get into production, but they also have all that physical uranium that's like around 30 something bucks, $38, I think, or something like that they've got, and they were buying up. So I thought that was pretty smart. Energy Fuels, I still think it's going to have that positive run because it's on the US, you know, US markets, people can buy it. It's not like it's Canadian only, or it's, you know, some of the stocks are going to be predominantly in Australia jurisdiction and just trading on the main Australian stock exchange. And when big funds want to buy, it's less likely that they're going to go trade on those, you know, those type of companies, more speculative companies especially. So you're going to have that advantage when US investors, I've got hundreds and maybe thousands of comments from people always like, I can't, you know, I'm in England, or I can't buy that stock, or I'm in America, I can't buy, you know, Deep Yellow, DYL. But there is a OTC version, say, of like Deep Yellow, right? And it's on the higher OTC exchange in the US. But like specifically, when we look at this, you know, all of these, same thing, Encore Energy. This is one that's done very well. I think that's why I've given them a little bit higher score. Nothing really sticks out too much. As far as pounds here, some of these numbers have changed a little bit, but this is kind of like a rough estimate, an average. When it's purple, it's a lot higher, but some of these companies, it's going to take a little bit longer to get into production. So like Deep Yellow, they're on, you know, being a developer, they're on set to actually get into production. I think I would actually, honestly, I would probably say at this point, John Borshoff, you know, he's old school. I would actually give him probably a 6, right? He's one of the only ones that's actually got this right with the timing, and one of the only CEOs that has built a company like Paladin that got into production. They had issues, but they still took an Explorer to get in production. Now, what might drop it is I'd say maybe the jurisdiction, the Namibia. I don't know if Namibia specifically, but in Africa, a lot of these projects have issues sometimes, right? We've seen a lot of these stocks in Africa, Global Atomic. When there's any issues, the government's there. When uranium prices go higher, my only thought is like, is it going to be like the tribes with Arrow? Because these countries, a lot of these countries in Africa have been mining uranium for a long time, and even uranium is sometimes pictured on their flag, right? It's a big part of the economy, but you're starting to see some issues over there. And I think as money prices go higher in uranium and it's sustained, everyone wants a piece of the pie, unfortunately. So you run into more taxes, more regulation, more issues, potentially more protests. There was a lot of protests in Namibia. So I'd say the jurisdiction, I might, just to drop it a little bit, because I don't necessarily think it's the number one up here, but it's kind of funny to see where it ranks. But just because it's higher ranked doesn't necessarily mean that I think that I'm going to be buying this. I might actually be wanting to buy a stock down here because I think maybe in the future things will change. But this is kind of like where I really put management probably at the very peak, because when we get a sustained uranium price and some of these companies aren't getting into production, shareholders aren't going to like that. And it's a potential that you'd see some of these companies already selling off because, or even some explorers that we're talking big game about, we have all these properties and they've drilled, they can't find anything. Or if they do have uranium, some of these that they're not going to ever get into production, right? Potentially. One on here that in the past, it done pretty well, but still, just kind of looking at this, like I'm really surprised that Western Uranium is still this low, right? Price wise. And I think that, this company was founded by the founder of Energy Fuels, UUUU ticker symbol. And honestly, like I said, it's some of these stocks, it's really odd, the pricing that we've had right now in a lot of these. So we're kind of in this, like I said, this weird spot where I think some investors are, we hit that 106. Some people think that this could be the peak, but it's like all the stuff I showed you earlier. Do you really think this is the peak of the market that it's done? And some of those people that are saying that might just be traders and just trying not to show their cards and wanting lower prices again, and they're going to rebuy, which I would like to do, right? But yeah, the main thing when you're ranking these, and you guys might disagree, that's totally fine. This is something that, I take into account. Like I said, these things, you might have other ones. Media exposure as well. Some of these, literally their X account, there's no posts, or the company only does interviews with, certain YouTubers, and it's that gets annoying because when they're just pumping the stock with, and I've never taken like an interview and been paid by any company, any of these companies, or any company in general for a stock. I think it kind of is wrong to do that, especially when a lot of these talking heads in uranium have got warrants for literally doing that. And I've seen little bitty YouTube channels making like millions of dollars from taking money from these mining companies, not just uranium, but gold. And they have to put it on their website. And a lot of these guys have deleted the videos because after a while of doing these contracts with these mining companies. So, media is a thing I take into account. And if they do too much, it looks like that they're pumping the stock. And, maybe they should be using that money instead of paying YouTubers to make videos on them. They should use that money to get into production. And a lot of these, explorers or developers have been, really talking the talk. And that's why a lot of these prices, stocks like Standard Uranium, they're not doing too well. The market caps are very small. Doesn't mean that maybe in the future some of these stocks could find some of them already do have uranium, but some of them, are very speculative. So, and the big thing is production time. Would they even make it, into production? Like the Paladin story from explorer to producer is very rare. The 1,000 bagger is very rare in the market. Not saying it won't happen. I think right now with the way the market is and how volatile it is, the ones that are going to get a high score for me right now are going to be producers, especially there in the US, right? And now if we continue to look, there's, if a lot of these, like Boss, I really like management there as well. everything else, just because their management's good doesn't necessarily mean their media is good. This might be updated. I've seen some things change specifically with the company. Boss, a Paladin. The other thing is like exploration upside. I forgot to talk about through here. There's some red ones here. The upside, like some of these, like they don't have potential for other projects. Like they hold 41 million pounds, right? But the exploration is not really exciting to certain investors. Some of these companies, though, the upside, it's really interesting. Like Deep Yellow, I think the exploration upside is a lot higher for them specifically. And another thing going into this, mega uranium, right? It's really, I think it's a PFIC, but the fact that it is on the OTC, but I think the fact that it's called mega uranium, it could have this meme stock, appeal to it if we get a massive amount of people coming in. So just because that stock, and I think they own shares in NextGen as well, a percentage of NextGen also holding uranium. So I hold this up as a little bit higher than some of the obviously other companies, Explorers. And I even put NextGen even fell down here into this area. And I think, like I said, jurisdiction is a big one for them. And I honestly would probably say the jurisdiction dropped to a 2 after this type of thing. Now, some of this stuff has changed. The value, I still think it's way, like now I think it's way overvalued. Like why, and you guys might disagree, but I don't think that this company, it's really, in my opinion, overvalued. So I don't see much upside. It's been a big runner, right? When I bought this, it's ran up, and I got, I didn't ride most of this ride with NextGen because I don't like the fact that, the jurisdiction there is it going to be an issue. I don't like the fact that I've seen a lot of talking heads talk about this, and I know specifically that they've got warrants, and I just don't like a company that, I don't know if they're actually going to get into production. Like if I'm going to be, if it's that market cap like this, then they better hold a lot of physical uranium, and they better be able to get into production, have permits and things. And it's just kind of speculative to me. So it's one of the only ones down here. Denison also fell on this list. Share structure is one of the big reasons why with this one. And you might be like, well, I think it's near 800 million plus shares. And we've seen months in this stock in 2021. So that this had billions of actual volume, and it still couldn't really hold that $2 range. So just because a stock, the share structure really does matter. And then that's like a big thing that I also look at. Jurisdiction, obviously with GoVX, that's going to be a 1. Now, some of these, any time that there's going to be, and I think Africa is probably has been the one that had the most issues on this. You've had major issues over there. And that's why a lot of these stocks have dropped specifically over there, right? Peninsula Energy, I also give that the upside there, in my opinion, is not much. Back in the day, I thought this stock, because it was in the US, they have assets, but the fact that they've been a serial diluter since the last uranium bull market basically ended, the things management said and then that they actually did, I didn't like. And the fact that they don't have a big board, if they were on the actual exchange, the big boards, they might trade better. But just the fact that they've diluted so much, I think they've really lost a lot of shareholders over the years because of that. And people see that. You look at the history.